Krishna, it's been tough on the FX side, much more so than equity. The debt a little bit more tougher, but certainly confined to EMFX. Why do you think that is?
Well, I think it's the dollar strength more than anything else, and an expectation that that's sort of telling you something nefarious about EM economies. I don't think that is correct at all. EM continues to grow pretty well. I think the growth in EM is actually getting deeper rather than shallower. And I can actually make a good case that China actually provides a little bit of monetary stimulus, unexpected in the market at the moment, but I think there's some inkling that they may be heading that way. If that is the case, you will end up with a boom in emerging markets.
It's interesting. Morgan Stanley pointed out in the last week or so, the one key global macro variable that you'd want to know over the last few years to really understand what was happening globally was China's credit impulse. If you get that right, you can pretty much work out everything else. Is that how it goes?
Oh, absolutely. I think if you go back to, let's say, 2015, 2016, when the world was on the verge of a recession, and we saw that impulse pick up and everything changed over the next 2-3 years. So China clearly is an important determinant as to how the global markets and sentiment go, and I think it's at a good place, and I think there's a case to be made that it can get to a better place.
Are there pockets of places where things got frothy? And I think I'm going towards Argentina, where June 2017, Argentina can come to market quite comfortably and get away a century bond, and then May 2018, they're requesting IMF help. Have we taken some of the froth? So two-part question. Was there froth last year in pockets of EM, and have we taken some of that away now?
Of course, whenever you have these sort of flows going into any one destination, especially destinations that are not too deep from a liquidity standpoint, I think you'll see that. But I would say Argentina and Turkey, two of the most vulnerable places, are really idiosyncratic stories rather than a general rendition of what emerging markets look like today.